Welcome back. Well, the grass sure seems to be greener for fertilizer stocks and investors lately. Mosaic and CF Industries soaring double digits in just the past month. Mosaic at a more than 10-year high, CF at an all-time high. They've doubled, in fact, since I tweeted about these names back on September 17th. As high natural gas prices caused European producers to cut back on their output, maybe benefiting the U.S. companies. Dig into the trade, though. BMO Capital Markets' Joel Jackson joining us now. He is Managing Director in Equity Research for Chemicals and Fertilizer. Bizarrely, before I got into TV, I used to trade these myself, the actual fertilizers, not the stocks. So I know a little bit about their business and how it runs. I mean, how important, Joel, is it for these companies, the U.S. versions and maybe Canada too, to have these low natural gas inputs? Because in Europe, they're paying $30 an MBTU for nat gas. They're killing ammonia production. We're paying $5.
It's good to be American and Canadian right now. Absolutely. Yep. The North American fertilizers are seeing $30 gas discounts right now. And this could be a sustainable advantage for a long time. And with Russia-Ukraine war going on right now, who knows when it gets better. So I think that these companies, CF, Nutrien, Mosaic, are going to see some of their best earnings. And I think you can still fly into the sun with these names. We still got some room here to go up.
Oh, okay, well, so let's get into that. There's still some room here, Joel, because they've been hot, and they've been red hot lately. Nobody talked about these companies forever. Now they're all the rage, but they've doubled. Let's be clear. They've doubled. I mean, is their net income going up 30%? Is their EBITDA going up 30%? I mean, are farmers not going to be able to afford to pay the kind? What are they paying? $1,500 a ton now. It used to be $300 a year and a half ago. I do wonder if these stocks have just come too far, too fast, that the price of the end product is simply too high.
Look, I think we're seeing these companies that mark to markets on spot fertilizer prices may do 3 or 4 times mid-cycle EBITDA right now, run rate. But we're still seeing prices go up to your point. We're seeing nitrogen prices go up to about $1,000 a ton, urea. We're seeing phosphate go well over $1,000. Potash is now floating over $1,000 a ton. And like, where's it going to get better right now? You've got significant sanctions against Belarusian potash. They've been shut down for a couple of months. You've got, Russia's also a large player in potash, obviously. They've got some challenges. Sanctions are everywhere. Natural gas prices are high. Everything, and especially the Ukrainian crops got to get planted very soon, or we could have finished an ag. So it feels like the data points are going to get better before they get worse.
So what are the chances then, if you look at both of the two biggest right now, Mosaic and CF Industries, do you look at CF as one that has more upside at this point in time, or is Mosaic the one you'd pick if you had those two to look at?
I got to be honest, we would do a basket of CF, Nutrien, and Mosaic, okay? I'm going to be honest. Now, let me tell you why. It's tough to figure out what is more crazy right now, that natural gas in Europe is in the 30s, or that a third of the world's potash is stressed by sanctions. I mean, if I have to think about it on a peace settlement, whatever that's going to look like, we could see maybe potash hang on a bit longer because the Belarusian sanctions might be more, stick around for longer, in which case maybe want to own Nutrien and Mosaic more. Because you might see natural gas prices fall in Europe on a settlement.
Yeah, but I do wonder, Joel, to my previous point, is it going to get to a breaking point where the farmers either cut back on their crops, have a lower yield, which, by the way, is terrible for global food production, or they're just going to be able to pay these prices and then pass it through? Farmers have to buy fertilizer, but they don't have to buy as much every season, as I understand it. So our CF and Mosaic and the others are still going to be able to sell the same amount of product as they would in a normal year?
Look, I think for the spring, we're fine. We have enough inputs. Farmers are locked in North America.
For this spring.
That's right. As you get into the summer and you get into Brazil starting to stock up for their main planting season later this year, and we start thinking about fall seasons, so we start thinking about getting inputs for next year, you're going to have problems if things don't improve. But yeah, farmers can get potash. You need demand destruction because you don't have enough supply right now. So this is why prices are going up, to get demand destruction and get farmers to apply less pounds per acre and to switch some acres maybe to crops that are less fertilizer intensive like wheat or soybeans to offset all the supply problems. So what you're saying is true. I think for this spring, we're going to be generally fine, but it's going to pile up if things don't get better soon.
All right, Joel, real pleasure to have you on in what has been no doubt a red-hot sector. Joel, thank you very much. Appreciate that. Pete, let's trade this again. The names, there's Mosaic and there's CS, or, CF rather, and everybody loves them. There's some other ones, too, that are out there as well. Are there any subsidiary picks or trades? You're up there in corn country, knee-high by July, right? Is there any sideways trade you like?
Well, you know, what I'm intrigued with right now, Brian, is the fact that CF, we did see some call activity in there today. So that intrigued me. The reason I asked the question I did is, if you look at the PE ratios right now of Mosaic versus like a CF, Mosaic is still extremely inexpensive relatively if you're just using that as your metric. So I'm just sort of curious about that. But I think when you look across, I think there's a lot of different names out there, Brian. There are a few others that are smaller, but certainly I think you want to go with the big names. And I think they actually, especially CF, with the exposure to energy as well as ag, that's why I'm a little bit more intrigued by that name, I think, right now.
Guy?
It's interesting, Brian. I think JJ did a great job. He certainly looks sharp, and I'm sure I'll be reading his stuff in the Sunday papers this weekend. But I'll say this, you're looking for second derivative plays. Look at Deere & Company, formerly John Deere. Had a parabolic move, still trading below a market multiple, 16 times next year's numbers. You have 12% EPS growth, 11% revenue growth. Despite the move, I think DE can continue to go higher.